Tesla stock is surging higher by about 6% today on some very bullish news. This is kind of going in the face of the bearish case of Tesla, and I think that's why it's so important, especially if you are a Tesla investor, to watch this video in its entirety. I promise we're going to keep it on the shorter side, give you guys the info, none of the BS you don't need to hear about. So let's get into it. The only thing that I'm going to ask you to do before we get into it is to hit that like button and to subscribe to the channel if you guys learn anything in this video. So let's talk about it. And today is a very good day for Tesla. It's continuing this rally that we have seen, now crossing $130 per share at the time of recording this video, up 6.23%. This could go either way. By the end of the day, you could get a reversal to this, or you could be up 10 to 15%. And the reason I say that is because we actually got news that sparked this rally today that the ECB, the European Central Bank, is going to raise rates by 50 basis points at the next meeting in February, and then they're going to raise rates by 25 basis points after that. And you would think this would be a bearish thing for our stock market, because right now the Fed futures are firmly pricing in 25 basis points for the next two meetings in America from Fed Jerome Powell. So you would think that would go against market expectations, but for whatever reason here today, it's taken as a bullish thing, and that is what has really sparked a lot of this huge rally today that we're seeing, right? That news was these candles. So you're getting a couple reds, you're getting rejected around $400. That's why I got to put in that note that, hey, things could change by the end of the day. But with Tesla, this is massive, guys, because Tesla right now, let me give you guys just a quick rundown of where we currently sit, and this is going to be like 30 seconds. It's very simple. Tesla, they've projected they will grow around 50% year after year for the next couple of years. That's why Tesla has a higher valuation than a lot of other companies. They put out 50% and they meet 50% expectations, or met 50% expectations over the last couple of years, right? Sometimes even higher than that. So if Tesla does grow 50% or even 40% over the next year, 2, 3 years, the stock is insanely undervalued at current levels. Well, if that growth disappoints and people stop buying cars, and maybe that growth is 20% over the next couple of years, the stock is overvalued. And that's why demand is such a key role with Tesla stock. And what you can see from the headline of this article is that Tesla China sales surge on the price cut. Tesla's retail sales surged in China in January after it slashed prices for its top-selling models earlier in the month. Data compiled by China Merchants Bank International (CMBI) showed average daily sales for Tesla in China during the January 9th to January 15th period jumped 74% from the same period in 2022 to 12,654 vehicles, CMBI data showed. That compared to a 14.5% year-on-year decline in overall retail auto sales in China in the same week, although sales of electric and hybrid vehicles in the country increased 36.5%, the data showed. So what it's essentially telling you right here is that in China, they're buying less vehicles overall, right? A 14.5% year-on-year decline in overall retail auto sales in China. But Tesla, no, they're gaining market share. They are accelerating their sales. And this is seen as a good and bad thing, right? Tesla has the margin to cut prices to increase demand, but some people don't like the fact that they're doing that. And we're going to get into the earnings estimate cuts that we are seeing over with Tesla, and that is this article right here from Barron's. But first, before we do that, I want to just touch on the market share situation. And China is obviously a huge market, and Tesla, like I just said, has the margins to actually cut prices and still be insanely profitable, whereas other players in the industry don't. Other Chinese automakers are at very low profit margins. If the standard becomes you cut prices for vehicles over in China, other automakers might just get squeezed out of the markets. And that's what you can see from this article. Tesla bears down on Chinese rivals as orders surge on price cuts. And it's basically essentially what I just said, that Tesla is gaining market share when the overall market is actually dropping in China, and not as many people are buying vehicles this time of the year compared to 2022. Tesla is actually gaining market share, and that is huge for Tesla stock and ultimately Tesla's valuation. Now, this article says Tesla slashed prices. Now, Wall Street is cutting earnings estimates by this much. Says Tesla started this new year with a bang, cutting prices for its vehicles around the world. Now Wall Street is making its own cuts to 2023 earnings estimates, and this is insanely bullish as well. If you're seeing Tesla stock reacting positively, right, going from $101 at its low that we just seen a couple of weeks ago, now to 130, even though the bar to meet is going down, meaning analyst expectations are dropping, then it makes it a little bit easier to beat on earnings coming over the next 3, 6, 9, 12 months. And that statistically bodes well for share prices, right? If you beat on earnings, you tend to have a more positive share price than earnings misses. Now, Bernstein analyst Tony Sacconaghi believes the impact will be, quote, huge. He cut his 2023 earnings estimate to $3.80 a share from $4.96. Sacconaghi believes the price cuts were in response to falling demand for Tesla's electric vehicles. He hasn't seen evidence of a surge in orders in China after after Tesla cut prices on January 6th. Insurance registration data out of China shows that about 13,000 Tesla vehicles were registered the week after the cut, up from about 2,000 vehicles the week before the cut. Insurance registration data, however, is volatile from week to week. And Dan Ives, he's the lead investment advisor at Wedbush, and he rates the shares a buy. His price target is 175. He wrote Friday that the price cuts are prudent and a smart strategic move as the economy weakens. Quote, this is a clear shot across the bow at European automakers and U.S. stalwarts that Tesla is not going to play nice in the sandbox with an EV price war now underway, added Ives. Margins will get hit on this, but we like this strategic poker move by Musk and Tesla. Ives maintained his 2023 earnings estimate of $5.35 a share and is waiting to see how things develop in coming months. Costs are falling along with prices, and Ives believes the cuts could also result in 12 to 15% more vehicles being sold this year. If the cost price volume equation doesn't work out as well as he expects, earnings per share could be in the 450 range for 2023, according to the analyst. So you're already putting these expectations out there that Tesla's not going to meet that, $5 and some change EPS number. And once we get to earnings, we're expecting really good earnings this time around, right? Because this was before the price cuts, record delivery numbers. You're going to see some pretty good earnings with Tesla, and I do think that is a catalyst for the price of the stock to go up. But from that point on, from Q1 2023 earnings and Q2 earnings, I do think the bar is being lowered, and with the share price where it currently is, down still over 65% from its all-time high, it has to make you a little bit more bullish on Tesla stock from here, guys. So that is going to be all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.